Well, home sales in the GTA dropping 39.5% in March compared to the same month last year. These numbers just released from the Toronto Real Estate Board showing this massive drop. Now, GTA realtors reported just more than 7,200 sales last month compared to a record of almost 12,000 in March of 2017. The average price also dropping about $130,000 to just under $785,000. Now, analysts say some higher borrowing costs as well as some other factors that may have people holding off on purchases. Let's bring in our Mike Eppel now because he's breaking down the numbers and they can be a little bit deceiving, Mike.
Yeah, indeed. This year, a year ago, Melanie, the market was simply going stratospheric. You could not find a house for sale, and anything that did come on the market had multiple offers and thousands, if not hundreds of thousands of dollars above the asking price being the actual sales point. So comparably speaking, we look at a year-over-year decline of 39% and you go, wow, the market has crashed, but not really based on historical averages. So analysts are saying, you know what, it's sort of returned to normal compared to the frenzy that we saw just over a year ago. So it's going to take some time to smooth out these numbers. And again, depending on what pocket of the city you're looking at, you're still looking at, in some cases, multiple offers on either condos or single detached homes. The detached market, though, has shown signs of slowing simply because of the price point. That market was one of the hottest when it came to price gains a year ago. This year, we're looking at an average price for a detached home in the GTA. Again, this is the average at $1 million, and sales in that particular component down well over 40% on a year-over-year comparable. And a lot has changed, certainly over the past year. Mortgage rates are up. We've got a lot of new rules in effect to try to cool things down just a little bit. We are looking this morning at a major sell-off on the markets on Wall Street, potentially this morning, as the Dow Jones stock futures has tumbled by about 550 points. And this is in reaction to news that broke overnight regarding China slapping a number of tariffs on U.S. goods in basically retaliation for the U.S. announcing a list of Chinese items that will face all sorts of tariffs coming into the United States. This ramped up trade war, the Chinese announcing overnight 106 items on their list, and it's big ticket items, economically sensitive in the automotive industry, the aircraft sector. Agribusiness is huge. They've hit soybean imports into China 25%. Now, this actually could potentially be a positive for Canadian farmers who might find a little bit more business in China if, in fact, these tariffs hold in place, because they're just at a preliminary stage right now. Still some wiggle room for negotiation. Markets, however, not waiting. Again, Dow futures right now down by more than 550 points. Canadian dollar coming in this morning steady, ramped up a little bit yesterday, over 78 cents, on word that the Trump administration is pushing for a preliminary NAFTA deal potentially by the middle of this month. That could bode well again for the Canadian economy if a deal is in place, and a lot going on the trade front so far today, and big swings on the market. We'll send it back to the studio.
Yeah, Mike, I'm watching these futures right now, and they're while you were talking, they were down to 555, but now they're off 558 points. So it looks like at least a 600-point drop for the Dow right at 930. Yeah. And like you say, though, maybe Canada could sort of eke in here.
It's got a lot of moving parts, certainly, Kevin, that we're watching on this. And keep in mind, yesterday the Dow was up almost 400. The day before that, it was down 460. So what a week it has already been, and we're only into Wednesday.
But it was the worst start to a quarter, though, that we found since the Great Depression.
It's 1929.
Wow. All right. Thank you, sir.
You're
6:40, 20 minutes now before 7 o'clock.